This fall does not worry me at all, and I think it brings out very well a day like this the basic nature of equities. That equities are extremely volatile and hard to forecast in the very short term. And what was happening, I guess, was the result of the worries around the second lockdown or spike in COVID cases. But then the environment again is extremely hard to forecast, and that is what leads to this volatility. But equities, I think, reward the patient investors extremely well over time. And to my mind, the markets and the economy are on a sound footing. So I would not worry too much about what happened today. One, I am fond of people who have a different opinion because it only makes sense to talk to people who have a different opinion. And I try and make it a point to talk to people and be a good listener. It's not easy, but we try and do that. As far as trading screen is concerned, since when I am managing a mutual fund, one has to look at the trading screen at least few times in a day. And on a day like today, it could be 10 to 20 times. And we are running large portfolios. There is some or the other trading virtually every single day. I think it is really the weekends that give people like me time to really move away from the noise and to do more constructive reading, thinking, and contemplation. I think the biggest thing that has worked for me, for investors, is one simple idea, which is India. And I think the outlook for India is the best, one of the best ever that I have seen in my career. And there are three reasons why I say this. I mean, we know that India is a global leader in services. Last time around, we missed an opportunity in manufacturing. But now China is losing competitiveness. India is competitive versus China because in China the per capita incomes are much higher, and the whole world wants to develop an alternate source to de-risk from the over dependence on China. And I think, given the very large market which India has, unlike most of its Asian competitors, and we are beginning to use this large market to our advantage to incentivize production in India. The government is firmly behind Make in India. They want to make in India for India and for the world. Schemes like PLI, initiatives like Make in India are a very good example of this focus. So I think, given our costs, the large market, and a very supportive government, India has a real chance of improving its share of global manufacturing. And this can create lots of employment, lots of incomes for people, and it can also improve our balance of payments. I think this is an opportunity which, if we capitalize on, can improve India's growth rates by 1 to 2% for the next 5 to 10 years. I think this is one reason what makes me very optimistic about India. The second reason why I'm optimistic about India is, as we all know, that India is full of bright young people who are technologically extremely savvy. And so we are at a times when the startups are doing extremely well. And this is also a very conducive environment because globally there is so much capital and at very low rates. So I think our skill sets, young people, entrepreneurs, and access to capital should give birth to many, many startups. And I do hope that some of these become really large world class companies. And a mutual fund like ours does not participate in startups, but I think it is great for the country because it leads to capital inflows. Whenever the majority opinion uh, is not grounded in reality, I think it creates an opportunity for long term investors. And I think uh, the ESG theme is also, to my mind, creating some opportunities. I'm all for ESG, but see, there are certain questions which have to be answered. And let me raise one or two issues. Thermal coal is looked down upon by ESG approach to investing. Now, the issue is that India's per capita power consumption is a fraction of the world. Only 5% of the homes in India have access to air conditioning. All would agree that power in India is a long term growth industry. Our needs of power will keep on rising. The second issue is that in India, unlike many countries in the West, the demand for power peaks in the morning or in the late evenings between 5 to 9. And at these times, solar energy is either not available or is not producing to capacity. Storage costs of energy vary between 7 to 10 rupees per unit. So if you indulge in storage, then who pays for this power? It's a very poor country. So who will pay extra 5, 10 rupees per unit? That is one question that has to be answered. If you move towards solar energy very rapidly before storage becomes, and the second is, if you don't, then how do you meet the demand for power in the evenings when there is no sun? I think these are very live issues, and I have spoken to almost every uh, person who on this who has an opinion, and there are no answers to these issues. I think my job, I feel, is not to invest in uh, based on my view of the ideal world, but I would like to invest in based on how I see the world evolving. If I could see the pandemic coming, then of course one would have acted extremely differently. And I did regret not having paid enough attention to what was happening in China. And I'm generally an optimist, and I think we should have done a little more work. It could have probably given some insights. But if assuming that you could not foresee the lockdown or the pandemic the way it panned out in India, I think I would not have done much differently, except, as I said, I would have avoided investing in some of the weaker balance sheet businesses in an adverse environment.